Welcome to this week. What a week it has been. Holy banana bread. It's good to be back here once again on a Sunday afternoon with you guys all out there. And I've already stumbled on my tongue once. We should turn this stream into a drinking game. Every time I stumble on my tongue, you got to take a drink. Not that I'm saying drinking is a good thing. But anyway, let's just move into the show. We've got a question right off the top, and I just wanted to sort of grab onto that. So, No Scratch Lifestyle came in at 3:23, so 40 minutes before the stream started, and wants to know. Question for you: is it true that oil companies give good dividends when the oil prices rises or is high, but as soon as the price of oil falls, they quickly reduce dividends? That is not true. A good example is Fortis. So Fortis is a Canadian oil company based out of St. John's, Newfoundland. They are, well, they're almost a dividend king. So they've been increasing their dividend for 49 straight years. There's been lots of time in that 49 years where oil has not done so well, but they have done fantastic with that dividend. And it's true with a lot of these oil companies. They're structured. They know the way oil goes. It does come in waves. It will go down. It will go up. And we're going to talk a little bit more about oil a little bit later today. But no, that's not particularly true. There may be one or two oil companies that may do that. But for the most part, you're fairly safe with oil. It's one of these, and a lot of times too, when oil goes down, it doesn't go down for a very long time. So that's just one of those things just to keep in mind. So I hope that answers your question, No Scratch Lifestyle. I hope you're still here. I hope you didn't think that, came in and put in the question. It's like, nobody's answering. What's going on? Yikes. All right. And we got Brian in the house. Welcome, Brian. Always good to see you. And I got Cisco. Hey. For some reason, I want to go War the Monkeys, but that's dating myself. So that's kind of fun. All right. So today, this afternoon, we don't have a lot of news. I will be right up front with that. This is going to be a news light show. I do have some news, though. So I always have something. So we got some stuff that we'll talk about. But throughout the show, throw in your questions, your comments, topics you want me to talk about, and we'll just hit everything out of the park. And we'll have a lot of fun there. Hello, Andrew. It is fantastic to see you here on a wonderful Sunday afternoon, whatever part of North America you're residing in. Okay, we're going to start right off the top with China. So one of the big disruptions that we've had to the supply chain, of course, has been all of the COVID lockdowns in China, because China has had that zero COVID policy. It's like they'll shut down a city because of a couple of cases, and that's not really, really, really good. So here's the situation. China is now starting to indicate that they're having second thoughts about the COVID zero policy. They're actually now starting to think that maybe they're going to go down the route of mass vaccinations, opposed to shutting everything completely down. This is great news, because this would be fantastic for the supply chain. It's what we really need, because all of these disruptions that China keeps on doing, and their disruptions are affecting everything from oil price to the supply chain as well. So it's always good to see that we've got some stuff going on. Okay, and Jill's in the house with a ho, ho, ho. I don't know if that's what you want to talk about. Christmas. We could have a Christmas chat now. We got that on Christmas Day. We got Jordan in the house. Hello, Jordan. And we have Cisco. I want to talk about Quant. Quant. All right. I actually don't know Quant. So that's one I would have to look up, Cisco, and take a look at it. Give me a little bit of basics in the chat if you don't mind, and then we'll go from there. Oh, is that crypto? Is that what that is? That might be why I haven't heard of it. If it is, 14.6 million coins ever to exist. Aha! So it's a crypto. I do have some crypto news as well that we're going to get to as well. Bonnie says hello, Candace in chat. Hi, Bonnie. It is fantastic to see you. Welcome, everybody. Welcome all. Welcome. Yeah, all that fun stuff. Yeah, so the whole thing with crypto, I've moved really, really far away from crypto. Just being right up front with you, Siso. Um, it's not that I don't have faith in crypto. It's that I need that regulation. Right now, crypto is, and I'm a day trader. So I'm a day trader and I think crypto is too volatile. So that says something. Um, it's one of those things I think right now that if you're looking at long-term investment in crypto, I think it's fine as long as you have some very good coins. So for me, Bitcoin, Ethereum, Polkadot, maybe Matic, maybe a few others. Um, I'll say XRP as well, just for the XRP people. Although I'm a little bit until the SEC ruling comes through on XRP. I don't really want to hold any, and that may be a mistake. So I'm willing to admit I could be making a huge mistake when it comes to XRP, but that's okay. That's the beautiful thing about investing is that it is okay to make mistakes. It's and there's also more than one right way to get to the end goal, which is really interesting. We'll talk a little bit more about the end goal as well, because that came up yesterday. And I was over on Create, Save, and Invest. We did a chat over there. And that actually came up. Like, what is the end goal of investing? What is everybody doing this for? And that's, I think, is really cool. Because for me, I mean, it's all about retirement eventually, long term. I mean, and we're not talking the day trading. The day trading is about money day to day, paying bills, things like that. But for the long term investment, it's all about growing that TFSA, growing the contribution room in it, setting myself up so that when I do retire, I have a nice net of passive income coming in through the TFSA, so that way there it doesn't claw back at old age security. So I think that's what everybody's long-term goal. Even if you're fresh into it, like you're 20 something and you're like not even remotely thinking about retirement. Well, the thing is, that's what your long term is going to always develop into that. And I think that's going to be everybody's end goal, whether you even realize it or not. But that's kind of cool. And we're going to definitely talk about that more coming up. What's this here? Why do you think the bonds have been rising for the last 6 months? Okay. I think we're in this situation with the bonds, also with the also GICs, for example, as well. It's basically been the fact that we've been getting a lot of interest rates. A lot of the interest rates been going up. There's been a lot of hikes, and that has been affecting the bond market quite a bit. Now, interestingly enough, normally with the hiking, you don't normally see the bonds going up, but you're seeing kind of some inverse stuff happening. Now, when you get some of these inverse type of behaviors with bonds, a lot of times it's indicative of a recession. So it's very, very interesting to see how this is all sort of rolling out, because we've got everything sort of moving it's almost like there's a whole bunch of pieces. And I actually want to do a video on some of the recession indicators. So that's on my list. I don't know if I'm going to get that done before the New Year's out, because I got a lot of stuff planned this year. But I'm going to take a look and see if we can get something like that done probably early January, especially as we start to move more and more towards a recession. Well, at least the U.S. is. Canada's got a little bit further to go, and we'll talk about that in a little bit here. What is the platform you day trade on? I'm actually using the brokerage from National Bank. Now, I'm doing my day trading not with crypto, but with stocks. So I do stock day trading, and that's the one I've been using. There are some others. Like I took a look at Desjardins brokerage, because they have they've got some trailing stop losses, which are really cool. But I just found that I can move so much faster in the National Bank. I like just the way it's set up. I like the ease of use. So that's what I've been using, and that has served me fine. Also, National Bank is also commission free. So is Desjardins, by the way. And I haven't tried to do day trading on Wealthsimple. And I'm not sure if I did it, it would have to be on their web. But right now, everything that I need is being met by National Bank. So I am absolutely cool with National Bank. Now, just a little side note, Volkswagen. And this is kind of a story that doesn't really fit anywhere, but Volkswagen is looking to get into making an EV battery factory. And they want to make it in the Western hemisphere. So they're looking basically at North America. And they have come down to their short list of potential countries that they're going to do it. And Canada right now is pretty much at the top of that short list. There's a few reasons. One, our energy is relatively cheap. And two, we have all the raw materials. In fact, in the Western Hemisphere, Canada is the only country that has every raw material required to make lithium-ion batteries. So, that's kind of cool. So Volkswagen may very well be looking to put a factory over here in Canada. If they do, location-wise, you're probably looking at either Ontario or Quebec, because I think they have sort of the best deals that they would be able to find. So it'll be interesting to see if we get that. I think that would be kind of cool. Now, do any of you guys Volkswagen fans? I used to have a roommate who was diehard Volkswagen girl, to the point that when she wanted to buy a new Volkswagen, she bought it in Calgary and then flew out to Calgary and then drove it back to Halifax. So I'm just like, whoa, that's a long drive just because you wanted a particular Volkswagen. So I think that's pretty darn cool. Okay, another piece of news. I do have some news. So, while you guys are figuring out your questions, your comments, and things we're going to talk about, I have Morgan Stanley. So Morgan Stanley have come out with a very dire prediction. So they're predicting massive pullbacks in 2023, and they're actually thinking the S&P could fall about 24% from where we are today. That's pretty dire. I don't think I absolutely agree with them, but if what they say is true, and they're thinking that it's not going to just be tech this time, you're going to see like industrials, consumers, you're going to see a lot of other sectors take some massive hits if this happens. So it's hard to say. I find when it comes to predicting the future, it's not an easy thing to do. And economists are wrong, I think, more than they're right half the time. So that's kind of interesting. Now, I know that Cisco was mentioning a little bit about crypto. Another exchange has now gotten themselves into a little bit of trouble. Now, we're not talking bankruptcy trouble yet, but Kraken is looking at, it's not looking, they're laying off 30% of their workforce. So that's kind of interesting. Now, they said it's okay, everything's great, we're all fine. Don't worry, we're giving them good severance. But today, anything that starts to happen, I get a little bit worried. We've seen a lot of big exchanges go down, and I don't think it's over. I think there's more to come. So we need to sort of keep ourselves a little vigilant. If you have crypto, don't keep it on an exchange. Use your hardware wallet. Something like a Ledger is a fantastic little one. There's a few others out there as well, but don't lose your money like Cisco, who lost some money on BlockFi. A lot of people lost money on BlockFi, unfortunately. Don't become a statistic. Keep your money, keep your crypto. If you're into crypto, keep it on a hardware wallet. The only time you really should be having it on exchange is when you're moving it, or you're cashing it out, or you've just bought it. But move it off, keep it on crypto. If you're not doing anything with that crypto, keep it on a hardware ledger. Keep it safe. I know I always get the question about Wealthsimple and ShakePay. Surely they're safe. They probably are, because they're not lending. Most of these companies that have gotten into issues have been lending out crypto. But here's that thing. You want to be careful, because nobody knew Celsius was in trouble until all of a sudden they were in trouble. I don't think, I'm pretty sure Wealthsimple is safe. I'm pretty sure that ShakePay is safe. But why take a chance? Even if there's a 1% chance that you could lose everything, well, why would you even open yourself up to that 1%? So, just keep your money, keep your crypto on a hardware wallet. Simple as that. Be safe. Okay. Hi, I made $1,200 with LIF. All right. So LIF is actually a fantastic stock. That's your Labrador iron ore. They're actually a royalty company, so they own the royalty for some major iron ore for a major iron ore company, and so they're being paid as that company mines ore and utilizes it. So they have a good thing. The one downside though, here's the one downside to LIF. Their dividend changes. So I like to call it a floating dividend. So depending on how much they're doing with that iron ore, that dividend can go really high or it can go in the middle range. And the middle range, keep in mind, the lower end of that spectrum for LIF is still better than most. So they are a good stock. They do pay a quarterly dividend though. So if you're looking for monthly, they may not be the one for you. But I've made money off of them as well. I've actually did some dividend capture on them a couple of times, and made a little bit of money. I normally don't do dividend capture on quarterlies because sometimes it takes them longer to recover. But I did on Life because at that point I think they had that month that I did it. They had a 24% dividend, so I jumped in for that, and it was worth it. But yeah, so that is a fantastic thing. Vineet says, what is safer than Wealthsimple? Well, I don't want to say that Wealthsimple isn't safe. I'm not trying to say that at all. Wealthsimple is like Wealthsimple on the stock side. Everything's insured. It's fantastic. It's just with crypto, you just don't know. And even though I think there's no danger on Wealthsimple with crypto, I would still, not even take that chance. I just wouldn't take that chance. Move your crypto to a hardware wallet, then you are 100% safe. Maybe you're 100%, maybe you're 99.999% safe on Wealthsimple. But, if it's not 100%, why wouldn't you go with a route that is 100%? That's just the way I look at it. I heard it's volatile, but my timing was clutch. Yeah, absolutely. It is fairly volatile. It does move. Now, the nice thing, though, is that I think 2023 is going to be the year of the resources. I think you're going to see a lot of good money to be made in the resource sector, and that includes LIF. I think LIF will do well in 2023, as well as anybody with lithium, copper, maybe even Barrick Gold might start to do well, but it's hard to say. I think they have a fair amount of debt. Yeah, so definitely 2023, look towards resources, pay attention to them. Maybe do some due diligence on some stuff. I know I will, definitely. All right, and I got Dimitri in the house. Hello, Professor Candace. Hello, Dimitri. Thumbs up done. Yeah, absolutely. If you guys have not hit that like button yet, just give it a smash. Turn it blue. It sends out, basically tells YouTube that people are watching, and it sends it out to more people in case, that's how we discover some new folks. And then hello to everyone in the chat. Ex-dividend date coming up in 25 days. Yeah, exactly. Now, I don't know if they have announced what that dividend is going to be yet, but, depending on what that dividend is, who knows? I might want to get in. That's what I want to do. That's what I want to do. And I don't do crypto. Yeah, if you're not doing crypto, don't worry. Wealthsimple is perfect. I have my portfolio in there, and I don't lose a single wink of sleep because of it. They are insured, and Wealthsimple did recently as well open up a deal with the Bank of Canada, so that way that they can avoid having to go through a clearinghouse with some of their money transfers, so to make it a little bit more easy. So they're moving. Wealthsimple is always moving in the right direction, and so far they've never let me down that way. So that is fantastic. A couple other little things here before we jump on to the next topic. Channel memberships. They are fantastic. So one of the things I'm looking at is right now I have done a exclusive video for the channel members. And I am letting them sort of know some of my buys and sells and things like that. I'm starting to put more of that information in. Now, as we move into 2023, I'm really looking at ways to sort of enhance that even more. No worries for those of you who are not channel members. I wouldn't worry. You're going to get the same fantastic content. But I just want to make sure that there is a really good incentive for people who do want to support the channel and who want that little bit of extra. So if that's you, then just hit up that channel membership. Also, when you come in to the chat, if you get that little message that says, hey, enable free memberships, do that. Because what that means is if you, let's say somebody comes in and they're like, oh, I just want to buy a bunch of memberships for people, then you could actually receive one of them. If you don't turn that on, then you won't receive one. If somebody does that, they do that kind of thing over in Twitch. And I think it's YouTube's way of sort of, I was going to say conversating, competing with Twitch, kind of doing that as well. And all right, let's see. Hello, Tim. And hello, Jay. Jay is awesome. Jay was my first channel member. So you can see he's got a nice little green there. How much is it? Tell us more. I think it's about $4.99 a month. And basically it's going to give you a whole bunch of different things. First of all, it's going to give you more access to me as I do extra behind the scenes videos and a few other different things. I'm also looking at doing, anytime I buy stuff, buy and sell, I'm going to be putting that into the channel members so that they sort of know exactly what I'm doing. And I'm also just looking at, and I'm talking to some of the channel members to look at some things that they want for me to add, because I want to make it a value thing. Because if you're going to pay $4.99 a month, I'm going to make sure you get the $4.99 a month worth it. So that's the channel members. Now, there are other ways to support the channel as well. We got like super chats, which are kind of cool. Once we get bigger, we're not there yet. Once we, hold on, Vinita, I'll get you in 1 second. Once we get bigger, and I've got a lot of people in the chat and it's moving so fast, we'll have super chats as our way to guarantee that your question gets answered. Right now, we're just still small enough that I can pretty much answer every question. But those are always appreciated because that's just little things that go back into all of the cost of running the channel, which is fantastic. How do we sign up? There should be a little link right below there saying join. I think that's the way it looks. I think it says join. Let me take a look and see. Yeah, right next to the subscribe button, there's a little button that says join. You click on that. It sets you up and you're all ready to go. So that's how you set up the channel memberships. All right, that's enough of the channel memberships for now. Definitely worth it though. All right, let's move on to our next little story. I do have a tiny bit on Suncor. So a lot of the investors have been pressuring Suncor to sell Petro-Canada. And Suncor has decided they're not going to do it. They're going to keep Petro-Canada in-house. And that's fantastic. Let's see, how long have you been doing this for? Well, the channel itself. So the channel is, I formed the channel late September of the previous year, so of 2020. So the channel's a little over a year old. Now, I've been looking at and investing stuff for a couple of years. And I also, I'm one of these people that when I decide I want to do something, I learn everything about it. When I decided, for example, that I wanted to get into investing, I went on to a sort of a crash course. And that's not just YouTube. I read a voracious amount. And that's just, I guess that's my background. So, you know, I have a double major, though it's not in finance. It's actually in biology and chemistry. So it's one of the reasons that sometimes some little bit of science sneaks in, but that's okay. So I find that fantastic. And what happened to Rye? He quit to be a YouTuber. So here's all I know, because I don't have a lot of information. I know that Rye left Calgary, came to Ottawa to help his folks out. So I think that's been keeping him very busy. So I don't know. I wouldn't say that he's quit. He's probably on a very long hiatus. That's what I would call it. But I don't know anything else outside of that, because he's been so busy that he hasn't really communicated with any of the the community at all. So that's all I can say about Rye. I'm sure you'll see him again. You'll see the odd. It seems to me he like drops a video maybe once every couple of months or something now. So I'm sure he'll be back. And so awesome about YouTube, I want to get started exposing myself on YouTube. Those are perhaps not the right words to use, but I think I know what you mean. So yeah, no, YouTube is fantastic. It is a great avenue if that's something you want to do. If you want to actually become a YouTuber, there's a lot of great resources out there. Usually, a channel I'd recommend is something like Think Media, for example. There's also Nick Niminen. Those are a couple of channels that provide you with all kinds of tools on how to get yourself started, how to become a YouTuber, understanding about the algorithm and how to grow and things like that. So that is a great way to get some exposure to getting started on YouTube. So if that's something you want to do it. That's what I always say. A lot of people just get afraid. It's like, you get a little bit of fear. I was afraid before I started. I was like, oh my God, what if people just don't like me? Maybe I'm just not, maybe I'm too old, or, I'm not pretty enough, or things like that. Well, who cares? There's an audience for everybody. So if that's something that you want to do, you know what you do. And this is words from Think Media. Think Media has their slogan, just hit record. And that's what you got to do. You just jump in, you do it, and you're going to suck. And then you get better and better and better the more you do, because then you sort of find your legs. You sort of find your personality. And you really start to connect, and you sort of understand, and you get comfortable. And that makes it so awesome. Oh, let's see here. You're awesome. Thank you. I like. I want to say I like that, but then I'm trying to be modest at the same time. I love how the content is Canadian. Yeah, absolutely. I do touch the American markets because as Canadian investors, we need to not ignore the biggest market in the world. There's a lot of money to be made in both the Canadian market and the American market. Though I will say, when I day trade, I actually day trade the Canadian market. I know a lot of people will move their accounts into American and they'll trade the American market because there's just a lot more different stocks that you can use. But I'm very comfortable with the Canadian market and I like it. So that is kind of cool. And I mentioned Bill C-11. We talked about that last week. So Bill C-11 is basically a bill that's going to give the CRTC a little bit more of a say in what happens with the YouTube algorithm. So I know a lot of YouTubers and a lot of people have been up in arms about it. But I actually have one of these channels that might benefit from it a little bit, because where my content is very Canadian, that means that a lot of people who come on will get served up my content. Like they would show my videos to them before they would show, for example, an American, or they'd at least have mine there with an American. So it may give me a bit more exposure. But I do understand one of the issues I do have about C11 is that it's not written really well. Like it sort of says that the CRTC has that right to be able to sort of regulate the content that's coming out. So they could basically, if they wanted to, and now the CRTC said they're not going to do it, but they could then regulate my content and say, okay, well, you have to apply your content to make sure, have to apply to us so that we can give you that's Canadian content, that's not Canadian content, sort of a stamp on each one. Now, they said they wouldn't do it. But the thing that I don't like is that Bill C-11 it gives them the room to do it. So even though they say they won't do it, that's today. Tomorrow, if they decide, oh, well, we're going to do that too, because we're going to treat YouTubers exactly like we do, a Canadian channel, then that is, that could be a problem. That might be, you'll know when this happens, because if it happens, I'll have a co-host that's probably going to be a beaver or a moose, with a little Canadian flag, and we'll have maybe maple syrup moment, just to make sure that I hit that Canadian content thing. But in all honesty, the fact that I talk 99% of the time, I'm talking about Canadian stocks, I'm pretty sure I'm hitting the Canadian content right out of the park. But if you were a YouTuber who's not talking, let's say, for example, you were let's say you were into Star Wars and you had a Star Wars channel. Well, it would be very hard for the CRTC to say, "Oh, that's Canadian content," because they would look at it from a different viewpoint. Now, one area where I could get hurt, for example, is I use Canva to make my thumbnails. Now, Canva is not a Canadian company, so that would be one little strike to say, okay, that's not Canadian. But the reality is, I'm not worried about it right now. I don't think it's the best legislation out there, but it is probably going to pass. It's already in the Senate, so I'm not going to lose any sleep over it. And if it does benefit me, then that's okay. But I do understand why some people are frustrated about it, and I certainly would hope that they could clean that legislation up a little bit and make it more crystal clear as to what the CRTC can and can't do. I think that would be fantastic. If you lost everything tomorrow and had to start over, what first two stocks or ETFs would you buy? Okay, great question. The first stock I would buy, even if I only bought one stock of it, would be Fortis. And the reason for that is that was the first stock I ever bought. So there's a sentimental reason there. So I would probably buy Fortis if I could own, just for that reason. Now, the rest, I would probably buy one stock of Fortis, and the rest, if I can, because I can only buy two stocks, and I need to get some kind of a diversification. So I'm definitely going to go with an ETF. Now, I have to consider what my long-term goals are, but if I want really good diversification, I could always go with one of the all-equity ETFs. So something like a XEQT or VEQT. So that's like, because those are all equity, they would give me exposure to a lot of stocks as well as emerging markets. So that would be a very diverse way to go. And then from there, because that's how I would build it initially, especially coming in now with what I know, is I would go with that diversity first through ETFs, and then I would start looking at adding individual stocks and maybe start moving back a little bit from that. But that would be, it would be fun. It would actually be kind of fun to do it. And I probably should make a video about it because I think that's kind of a neat little thing. And Jill says, I want that regardless. I want a maple syrup moment. I want you to have a little beaver, maybe like a puppet. Oh, gosh. That is hilarious. If I have a little beaver puppet, just come up every so often and go, hello. that'd be neat. Let's see. Maybe I should become a channel member and put that as a suggestion. Yeah, that's exactly what you should do. Become a channel member and then say, Candace, you have to have a puppet, a beaver puppet. And then I'd be like, okay, I will have a beaver puppet with a little Canadian flag that waves, maybe. And Cisco says you should look at GBC. Great rock for today trade. Okay. And let me see here. GBC is a great stock for day trade. Oh, okay. I see what you're talking about. Okay, I'll take a look at GBC. Right now, I'll tell you I'll tell you guys. One of my favorite stocks actually is Manulife Financial. And it's more expensive, like it's not a penny stock. So, but because it's a little more expensive, I don't have the worry of massive drops. So a lot of times I'm playing where, I'm playing however many ticks, because each tick represents a certain number of dollars. And a tick is in this situation, a tick is basically a penny. So I'm playing it by the pennies as it moves. And, you buy enough stocks and those pennies become significant. So Manulife Financial is one. It's very easy to predict. Like right now, it keeps on climbing. So I'm at this point where I would really love to see a big correction in Manulife Financial as a day trader on my day trading side. I mean, obviously, I'm also invested in Manulife Financial in my TFSA, and for there, I'm like, yeah, keep going. Another a smaller stock I do like is I also like BTE. They are an oil company. They're not that big, and they do have a good amount of volatility, but their volatility is absolutely tied to the price of oil. So I can pretty much watch the way oil's going. And when oil's rising, so is BTE, or if oil's falling, so is BTE. Now there's a gold ETF that I also like to day trade. It's XGD, and it's kind of interesting because I find a lot of the gold stocks, they just don't move the way I can predict them very much. But this ETF tends to have a pretty steady movement because I normally like to play by the candle. So I will play in an hour window, and I play that candle for that hour, and I basically set up my upper and lower limits as I'm watching the stock move up and down that candle. So, and I find that works really, really well. And a lot of times I'm just jumping in, I'm just buying a whole bunch of different stocks. I'm putting my limits on them because that way they'll automatically sell once they hit what I'm looking for. And then patience. So between all of that, that's kind of one of the key strategies. And I am going to, and I know I keep saying this, but I do have, and I'm hoping for this Saturday to do just a basic day trading video. So I'm looking to do that for this Saturday. But anyway, we'll go with that here in a moment. I did want to talk about oil because we just mentioned BTE. So right now, as we're talking, OPEC is meeting in Austria, and they're looking at, basically, it's a production policy meeting. So what they're doing is they're going to be recommending, well, everybody thinks they're going to recommend more production cuts. If that happens, we know that Monday, the price of oil is going to go up. So that's kind of an interesting thing. So if that happens, and that will affect, so I mentioned day trading with BTE. If I know I've got an upward trend on Monday because of something that OPEC did, then it makes it a little bit easier to sit into some trades a little bit longer and make a little bit more money before I start cashing out. So it'll be really, really interesting to see how that meeting goes. Now, I don't actually know if the results yet of that meeting have come out yet, but I know it's happening. It's probably already finished by now, so we'll find out. We'll find out for sure. But I have a feeling everybody does think they're going to do some cuts. So, look for oil to be going up tomorrow if that's the case. I did want to touch on the banks a tiny bit. Now all the banks had their Q4 results, and people. It's funny. Sometimes people are like, "Wait a minute, how are they doing their Q4? The year's not over yet." Well, it's because in the world of the banks, the fiscal year ends at the end of October. So Q4 is, basically August, September, October. So those results have all come out for the banks. Now, tomorrow, it's actually interesting. I had a comment on one of my videos last week. Somebody was saying, "Oh, I wish you could make a video on the banks and all of their Q4s." And I was like, "Okay, yeah, I'll do that Monday." So that's what's coming out tomorrow. A video on basically a summary of all the Q4 results for the Big Six. So that will be dropping tomorrow. It's a different type of list. Normally I have my other list. Normally I'm showing you some dividend stocks or some growth stocks, but I wanted to do this earnings one. So that's one of the reasons that I haven't put it on my list here to talk about, other than I will just mention briefly about the Royal Bank. They bought, they're trying to buy HSBC. So HSBC is Canada's 7th largest bank. So this would definitely be really nice for the Royal Bank for two reasons. One, it would give them more exposure on the West Coast, and it will also give them some trade access to Asia, which they desperately want. So it is an interesting thing. They still has to go through the competition board, though. So it could get struck down, but I think it might go through. So we'll have to see and pay attention to that as we move along. And Mike Hurst is in the house. Algonquin Power. Ouch. Have you already talked about this one? Actually, Mike, my Thursday video was a deep dive on Algonquin Power, AQN. AQN is one of these oil companies, and we'll talk a little bit about it. They're in a lot of trouble. They have a lot of debt. So that's not good. And with the interest rate going up and up and up, that is going to, they're pretty much fighting just to pay off that interest rate at this point in time. Now, have no fear if you're worried about whether or not they're going to survive. They will survive as a company. Right now, they are highly regulated with their U.S. holdings. So through Liberty Power, for example, that's one of their subsidiaries. They're kind of like they're almost too big to fail. They will struggle. They will have some difficulties. I know that they don't want to cut their dividend, but they're going to be cutting that dividend. There's just no way around it. So right now you're getting a crazy 9% yield. That dividend will come down. But here's the thing. Once Algonquin gets to the other side, and they are doing some stuff like their 3-wind, they're selling partial parts of that, and they're buying this other, I think it's a Kansas Power and Utility. They're doing a little bit of balancing to basically increase the amount of regulation that they have in their utility side, because regularly, if you're regulated, it adds so much stability. And that's going to be interesting because I think they're going to use that extra stability just to try to get things under control. But they do have to worry about these rate hikes. They do have to worry about this interest. Now, on the other side of the story, so when we do finally, see some overall recovery in the market, I think they're going to do better. They're not going to come flying back the way a lot of companies will. But they will come back, and long term, I think they're going to be a solid investment. Dividend wise, I think you're still going to get a half decent dividend, but I don't think you're going to get the crazy high dividend right now that you're seeing. You're going to see it get cut. I imagine they might even cut it some more because they're at that situation that their earnings are not covering that dividend in any way, shape, or form. I think right now their payout ratio is over 1,000%. Which is absolutely crazy, and unsustainable. So keep that in mind with them. I still love them. I still love that stock. That was actually one of after Fortis, that was the next energy stock I bought. So I used to love them a lot. But when I started to see their debt getting out of control, I sold out of them because I kind of could see the writing on the wall at that time that Algonquin was going to have some issues as we move forward. And interestingly enough, we had an oil boom, but they were falling. That says a lot. When you have an oil boom and you've got, oil and energy boom and everybody's making money hand over fist, and you got a company like Algonquin who's not, that speaks volumes. And that's, one of those reasons that I, made that choice, that I got out of them for that reason. There was just no way I was going to stick around in them. All right, yeah, so that was Algonquin. Movie news, Amazon. So Amazon, they've got their streaming service, Prime, which is fantastic. But now they actually want to make theatrical movies. Amazon is talking about making about 15 theatrical movies a year, and they're putting billions into it. So it'll be interesting to see. Could that be the future of streaming services if they start to muscle in on Hollywood a little bit? Because I know if you look at some of the originals, they're okay, but are they going to be, can they make them? Can they take that extra step to a Hollywood blockbuster? I don't know. So it'll be really interesting to see what they're able to do. I will admit, I actually enjoyed the Lord of the Rings series that they put on Amazon. So, maybe they can. Are you guys ready to start going to see some of these big blockbuster movies made by your favorite streamers? So let's keep that in mind. And Ciso says, I believe Grayscale is in trouble with FTX scandal. Yeah, absolutely. See, Grayscale, they offer a discounted Bitcoin. It's a Bitcoin trust. And I know Kathy Wood has just been absolutely gobbling up that Grayscale Bitcoin. If Grayscale were to fold, let's just say they went under, the ramifications of that would be massive, because I know Oh man, I just know that it would be absolutely devastating to a lot of different businesses. There's a lot of big businesses in with Grayscale. So let's just uh, let's just keep our eyes on Grayscale. If Grayscale goes, that's bad. That'd be really bad news for crypto in general. And here's the funny thing, though. Keep in mind, as these exchanges are falling and they're folding up and they're um, kind of collapsing, it's not that crypto's collapsing. It's that these businesses are. I mean, crypto still has the same fundamentals, but honestly, without regulation, it's not going to get anywhere. Bitcoin will never get to $100,000 without some I was going to say registration, some regulation. So that's kind of that's kind of an interesting thing. Ooh, Mike says, I'm hoping for Apple to buy Manchester United and add to their live content. Yeah, I did hear that Manchester United is up for sale. If those of you who like, I guess, well, over there it's called football, or that'd be kind of cool. I don't know if Apple will do it. I assume, Mike, that's because you like Apple and you also like Manchester United, maybe. Maybe that'd be kind of interesting. All right. So that was that. Now, there was a little bit of jobs news that came out. We're not going to talk so much about the American stuff, but in Canada, we added 10,000 jobs in November. Employment actually rose in some of the sectors such as finance, real estate, and manufacturing. Although construction and wholesale, as well as wholesale trade, that actually fell. So there was a little bit of a fall in some areas. Unemployment itself actually fell to 5.1%. Now, here's an interesting thing. This week coming up, we've got our next rate hike in Canada. Now, everybody's starting to say, oh, it's going to be a 25 basis points, so 0.25. It's still hard to say. I think it can go either way. I think there's still a chance that we could get a 50 basis points. So I think it's like kind of split in the middle. I think the market is kind of baking into the idea of 25, which the bad part about that is if we do get a 50 point, it will impact the market a little bit because that's not priced in right now. The 25 is. I'm hoping for the 25 because I think, the 25 would almost guarantee, at least a Santa Claus rally in the TSX. And then, of course, the following week, we've got the big one with Jerome Powell. Now, they did have the the Fed minutes, and he actually said in the minutes that, they're looking at smaller price hikes and, they're kind of moving a little bit towards that end game. Now, he also did mention as well recession. So he said that a recession is as likely as the baseline. So it'll be interesting to see how that comes out. And I think as well, I think the U.S. is recession bound. Now, Canada is a different thing. Our GDP data came out for the last quarter, and our economy grew 2.9%. So we're still 6 months away from being able to call a recession in Canada based on the GDP data. Now, they do not have to, they can call a recession with GDP not hitting the two negative quarters in a row. They can do it. Doesn't happen very often, but it is possible. Now, here's the thing, though, is you got to realize that everywhere we're looking at the economy shrinking, except for two areas. And those two areas are what caused, they sort of propped up our economy. And that's why our GDP was, 2.9%. And that was, energy. Our energy and our agricultural exports have been making us a lot of money. And that's why our GDP is positive. So keep that in mind. So that might be factors that they take into consideration when it comes to whether or not a recession will be called in Canada. But I think you will see one in the U.S. We're getting closer and closer, and things are just getting to that point. Now, here's the thing. The U.S., if the U.S. goes into recession, Canada always follows. So if that does happen, we could be looking at, I would still say 2023, before 2023 is out, I think we'll have a recession in both Canada and the US. I think the US will hit it first, and then we'll have to see about us. All right, so that's it for the news. The news is now done. Woohoo, I told you I didn't have a lot this week. So there we go. I am just closing off my news window. All right, so now it's up to you guys. Whatever you guys want to talk about, throw it in the chat. We'll do that. Like I said, we got about 10 minutes left, unless you guys get me going on a roll. You get me going on a roll, and I don't stop. So that's kind of that neat little thing. Give you an idea of what's coming up this week, at least coming up. Well, I'll give you a general idea of what's coming up the rest of this month. So, of course, tomorrow we have our bank video. So the big six, I've already mentioned that. I'm going to do another, I think I'm doing a deep dive on Thursday. I haven't figured out yet who that is. I know I've had a request for Adobe, so I'm not sure if that will be the Adobe one, but there's a chance of that. Now, once we hit the 13th of December, that is when we're going to do our stocking stuffers. And the stocking stuffer is the 12 stocks voted by you guys. And if you haven't voted yet, be sure to vote. You can either put it in a comment on this video if you're watching the live stream, or there's also one in the community tabs where I'd asked for votes, as well as over on the Facebook group. So you can do it any one of those places. Just get your vote in. Give me your 3 favorite stocks, and 1, 2, and 3. And I will give you basically your first stock gets 3 points, your second stock gets 2 points, your third stock gets 1 point. If you're a channel member, those are double. Just putting that out there as well. So give me that. I will get that all added up. Once I film, because I'm going to do 12 shorts running from the 13th of December right up to the 24th. Each day will be going from 12, 11, 10. It's a countdown. So we'll have to see what they are. I'm sure most of you can kind of guess what some of them may be, but it's entirely up to you guys. Now, this is not going to be the 12 stocks you have to absolutely buy for 2023. I'll do something similar to that later. These are just the ones favorites. These are just community favorites voted for by the community. I don't even get a vote on this one. I'm letting you guys do all the work, and I'm just going to get these all off. So yeah, get that to me. As long as you get it to me before I film these, and I'll probably be filming these towards the end of next week, or maybe next weekend, I think. So as long as you get it to me this week, you should be good, and we'll get it in there. And keep them Canadian. I had at least one person vote for Tesla, but I want to keep these Canadian. So keep them Canadian. That would be awesome. All right. So that's some of the stuff going up. I did mention as well, we're going to we'll have a live stream right in the early part of the new year, just sort of to talk about a few of the little changes with the channel, because I'm always looking to improve the channel, make it better. So we're going to do all of our evaluations of 2022, figure out what I can do to make things even better going forward into 2023. So I'm looking forward to that. I think that is going to be a lot of fun. All right. And Mike has a comment here. Any thoughts on the housing market? I'm waiting in the wings, ready to buy. It's so frustrating. Yeah, so right now is absolutely not the right time to buy. Not while the rate hikes are still going up. Now, it does sound, from what I've heard from the Bank of Canada, that we're looking at smaller hikes and that the end is in sight. So you may want to wait for the end. And I think as well, they always overcorrect. So there'll probably be some coming back down again afterwards. So that's kind of the way the market sort of sits right now. If you want to buy, though, here's the thing. Here's, I guess, what I would do is I probably wouldn't buy right now because of the interest rates, but I would start putting aside the money. I would maybe even, put it aside, let it build up while you're waiting for this to come down. I would even think about using like a GIC Like maybe if you're thinking, okay, things will probably be better for me in about 6 months. Well, instead of holding on to the money, throw it into a 6-month GIC and make close to 5% interest on it. So at least you'll have a little bit of money, build up your down payment, pay as much as you can when you buy that house, because while interest rates are high, the more you can put down on the capital on that house, the better it's going to be for you when you're looking at what you're going to end up, paying in interest versus principal over the length of your mortgage. So that's kind of my thoughts on that. I know it's not a great market, and here's the thing too, is because this market is so bad, people can't sell their houses. So the prices are also going to keep coming down. So here's the thing, the longer you need to find that sweet spot in waiting, where people are going to start willing to buy houses again, because as people aren't willing to buy the houses, that price keeps coming down and down and down. And the more you can knock off of the price of the house, the better. Now, if you are in a situation that you absolutely need a house right now, I would even consider coming in and lowballing people, because if they're not getting a lot of buyers and they really want to offload that house, they might take your lowball offer. So that's just a thought as well, because, if you can save any kind of money on the whole deal, that is not bad. The other thing too, I believe that it's supposed to, I haven't seen the full details yet, but that new TFSA for first-time home buyers is also coming out in January. So you might be able to utilize that to grow some of your money. If you're thinking let's say you're thinking you're going to be waiting for a year, why not use something like that if you've never owned a home before? Now, if you've already owned a home, of course, you can't use that. So just a thought. So there's a lot of different options out there for you when it comes to house buying. So that is cool. All right, what else do I have for you guys? I don't have too much more. Yeah, I did buy a Santa hat for these shorts. It's a little bit longer than I thought. Like I wanted to buy a nice hat, and I ordered it off of Amazon, and it's quite like the ball almost might even come almost off the screen type thing. I'm gonna make it work though, so we'll make that work. And here we go. Jill has a comment. So the problem with this suggestion is that because house prices start to go lower, people don't sell as much, so there's less supply, and there's still a fairly large demand, especially for rent with rent increases. Yeah, there is always that as well. You have to sort of take everything into consideration, and a little bit of it is a juggling point. Like while prices are going down, once the demand comes back, those prices are going to come right back up. So you kind of want to find that sweet spot on the way down, provided you're okay with the current amounts that you're currently paying when it comes to all of that fun, all the fun rate hikes. Well, let's see here. Any point owning REITs when I've already got some solid blue chip stocks that pay nice dividends? It really comes down to REITs are just a great way to diversify into real estate without any of the pains of real estate management. So it comes down to diversification. So if you feel like your portfolio is really well diversified, you can ignore REITs if you really want to. I know a lot of people do love REITs simply because you get some half decent payings. But if you've got a good marriage of blue sector, and maybe even throw in one of these, a solid ETF, whether it be a Vanguard or one of the all equity, that in itself could probably help you. So you don't absolutely have to have REITs. I think I've got a couple of REITs, but more or less, it's just more or less for the dividends. Like I think I've got Slate Grocery REIT, for example. But there are a lot of different stocks out there that you can go to. You don't have to do REITs. Really comes down to if you're happy with that diversification, because you don't want to have all of your diversification into one sector. You want to try to spread it as much as you can. REITs are just a good way to get into real estate. And because keep in mind with Canada as well, we don't have as many sectors up in Canada as you have, for example, in the US. Now, with that being said, if you want to get into some of those extra sectors through Wealthsimple, if you go with Wealthsimple Plus, where you get the American account, you could certainly diversify into sectors that, for example, we don't have in Canada. So that's just something to keep in mind. All right, that was a fantastic question. All right, everybody, we're at the hour mark. And it doesn't look like we have any more questions. So anyway, I want you guys all to have a fantastic rest of your day and have a good work week next week. Hopefully the market is green for you. And if you're invested in oil, hopefully we'll find out about OPEC soon, and we'll find out whether or not our oil stocks are going to be going up tomorrow. So anyway, everybody, thank you for coming, and I'll see you guys again here next week. And we got more videos coming out. So take care, everybody, and we'll talk to you again soon.